When you're looking for the best stocks to buy, double bottom bases can launch some serious gains and make you a winner with a capital W. W not only stands for win, but it's also the shape of the double bottom base and how the pattern got its name. Like the cup with handle base, the double bottom base is one of the most powerful and profitable chart patterns. While the shapes are different, the basic concepts behind the two patterns are essentially the same. For the double bottom, you typically have a prior uptrend of around 30% or more that happens first. The stock then hits resistance and pulls back to form the first leg down, tries to rally for a while, but then hits resistance again and begins to form the second leg down. Now, this is key. The peak in the middle of the W should be in the upper half of the base pattern. It should also be below the peak on the left side of the pattern, and the second leg must undercut or go lower than the first leg down. Similar to a cup with handle base, this is where we have that final shakeout to get rid of those weaker, less committed shareholders. And now that most of the sellers are out of the way, the stock starts to climb again. Like all chart patterns, the ideal buy point here is based on the most recent area of resistance. That's the peak in the middle of the W for the double bottom base. And like all traditional base patterns, the appropriate buy range here extends 5% above that buy point. Make sure to keep in mind that a double bottom takes at least 7 weeks to form. Double bottoms get their shape because they tend to appear when the overall stock market is showing a choppy roller coaster type action. But despite that volatility, double bottoms can deliver some serious gains. Take Zscaler, for example. From April to September of 2020, the cloud-based information security company more than doubled in price, rising 146% until it topped out at $163.80 and began forming a double bottom base. 2 weeks into the pullback, the stock forged its first bottom at $124. Then it rose 5 weeks later to $158.74. This price here determined our buy point. Then, 3 weeks later, the second bottom at $120.34 undercut that first leg down. This gave us a 27% depth in this double bottom pattern. Finally, after a strong earnings report in early December of that year, Zscaler surged 26.5% and cleared its $158.64 buy point with gusto, reaching $189.65 in heavy volume. 11 weeks later, you could have made off with a 45% profit when shares topped out at $230.88 before they pulled back and started a new cup with handle base. And that's just one example of why you want to keep an eye out for stocks forming a double bottom, so you can turn that W into a winner.